Yeah, okay, we're live now. Great. So, hello everyone. Good evening. Thank you for joining in today. I hope you guys are having an amazing day. Uh, we are seeing a lot of people tuning in. That's great. So, welcome all to the Gulaq February AMA webinar. Let me start by introducing myself. My name is Simran and I work in the business and marketing department of Gulaq. I would be moderating today's webinar. We also have with us Mr. Vivek Sharma. He is the investment head of Gulaq and would be our key speaker today. So, before we begin, let me just give you a quick walkthrough of what we have planned for today's webinar and the flow that we would be following. As always, we would start with giving you a brief introduction about ST and Gulaq for the people joining in for the very first time. After that, Vivek would be talking about the latest rebalance update, which got triggered on 1st February. So, we hope you guys have rebalanced your portfolios until now. Lastly, we would be answering all your questions. So, prior to the webinar, we received a lot of questions from you guys. We got an amazing response, so thank you for that. What we have tried to do is we have went through all the questions and categorized it into different themes. So, we have consolidated some data around it as well so that we can answer your questions in a better way. And at the end, if we have some time left, we would surely take a few questions from the comment box of YouTube as well. So let's begin. Vivek, can I please ask you to share your screen?
Yeah, I don't have the rights to share, so you need to
Okay,
make me
let
the
me
host.
just make you the host. Yeah, I hope the screen is visible to all. So we've already covered the agenda part. We can start with introducing you to ST, which is the parent company of Gulaq. So ST is a pioneer of systematic trading in India. We started back in 2008 when SEBI permitted algo trading in India. So we've been in business for about 15 years now. We have our PMS business, which caters to a lot of high net individuals, and we are currently managing an AUM of over 1500 crores. Talking about Gulaq now. Gulaq is SEBI registered retail investment advisory arm of ST. How Gulaq started was that we wanted to serve beyond HNIs to the retail audience. So basically, Gulaq works on the same research models as ST, but basically caters to a larger audience. Our portfolios are available both on small case and pick right. We went live back in May 2020 on small case. Till date, we have served a total of 20,000 plus clients, and for that, we have you to thank for putting all your trust and confidence into Gulaq. Okay, let me also introduce you to the key members of our team, starting with Mr. Sandeep Tyagi. He is the founder and CEO of Gulaq and ST. He is an alumnus of IIT Delhi and did his MBA from Columbia Business School in the US. He has an experience of 30 plus years in portfolio management service. Mr. Vivek Sharma here is the investment head at Gulaq. He did his graduation and masters in BTech from IIT Kharagpur. He also has an experience of 20 plus years in trading and investment management. Lastly, we have Isha Gupta. She is the business manager at Gulaq. You might have interacted with her in our previous webinars. She has a 5 plus experience in consulting and financial services. Okay, let me also quickly walk you through the important disclaimers. So, ST Advisors, as I mentioned, is a SEBI registered investment advisor. Here is our SEBI registration number. As we all know, investment in securities market are subject to market risks. You should read all the related documents carefully before investing. Any securities quoted in this presentation are for illustration only and should not be treated as recommendation. Now, I would give the floor to you, Vivek, to talk us through the latest rebalance update.
Okay. So we also had published quite a few blogs that we keep publishing from time to time on our website. So I would encourage everyone to have a look at it. Uh, the idea is obviously to introduce you or to so that you know Gulaq and ST and what we are doing better. And also, some of these blogs are more focused towards making you better investors. So I would encourage everyone to go visit with gulaq.com blog sections and check out these blogs. Yeah, so this has been the change in terms of market cap allocation. And this is a trend we are seeing from even last month, from December to Jan, we have increased our large cap allocation. And even from Jan to Feb, this has increased further from about 40 to 50%. And same increase in mid cap, and our small cap allocation is now zero. Now, just to make sure, these market cap, what we follow internally is the market cap of uh, the Bloomberg specification, in which what it mentions is any company which is greater than $5 billion of market cap is a large cap. Companies between $2 to $5 billion are mid caps, and companies which are smaller than $2 billion, they are small cap. So based on that methodology, those specifications, these are the market cap wise allocations. Now sectoral allocation again, uh, here's the overall detailed breakdown. So we are primarily bullish on industrials, consumer discretionary, healthcare, and real estate, whereas we are underweight on primarily two sectors, which is financials and IT. These are two sectors that we are underweight currently. Yeah, I think some of you also mentioned that you'd like us to to talk a bit about our other gears also. So these are the three gears that we have covered in this webinar. Gear 6, obviously, most of you are invested in Gear 6, but we have Gear 5 and Gear 4. And here I'd like to just clarify a bit about, there are a few questions also regarding gear-based methodology, but you can just have a look at the returns. I think all of these gears are performing really well, although we should not really compare gear 5 and gear 4 with the benchmark. So this benchmark is actually meant only to be compared to gear 6, because gear 6 is 100% equity, which is the same as benchmark. But if you see Gulaq gear 5, it actually has only 80% allocation to equity and 20% to debt. So in effect, what we are doing is we are making this gear 5 slightly more safer. Obviously, you will need to compromise a bit on returns, but this makes this specific portfolio safer. And Gear 4 has even more debt allocation. 40% is allocated to debt and 60% to equity. But the equity part in all of these, the stocks and their weightages and the methodology, everything remains the same across all of the Gulaq gears. So equity, we have one portfolio, and then the gear wise methodology is just so that we can make these portfolios safer by adding debt, right? So even if you look at Gulaq gear 4, which was launched about a year back, this has done really well, last 1 year performance, and has even beaten the benchmark, which is 100% equity, although it shouldn't be compared. So in case of a drawdown, what we'll expect is, let's say the benchmark, if it maybe falls down by say about 10%, I would expect Gulaq Gear 4 to fall down maybe about just 2, 3, 4%, somewhere in that range only. That would be the expectation. So much lesser drawdowns overall, and performance, you can see. This is the last 1 year performance. Yeah. Okay, I think Simran, we can start taking the questions.
Okay, sure. I
Yeah,
think we should first address the questions that we received prior to the webinar.
sure. Yeah,
So, what we have tried to do is we have tried to categorize these questions according to the themes that they run on. So, we can first start with the stock selection process since this was the most asked question this webinar.
sure.
So, Manisha is asking, please clarify the philosophy for entry and exit and use on dynamic rebalancing instead of monthly.
Okay, see, our approach is what is popularly known as factor investing. So what we have identified are certain specific driver of returns or certain factors which actually impact the stock prices. So it could be something as simple as the fundamentals or the return or the fundamentals or the results. Let's say quarterly results. So each company reports these quarterly returns, and you have uh, multiple specific fundamentals in it. So there's return on capital employed or return on equity or price to book ratio, price to earnings ratio. There are multiple ratios, multiple fundamental parameters, and most of this becomes the fundamental factors. But then we do have technical factors also. So these technical factors could be many uh, very technical factors, like let's say momentum, which is the simplest and also the most popular technical factor, which tells us, let's say, momentum could be measured multiple ways, and one of the most simplest way of measuring momentum could be last 6 month or last 3 month returns. And the higher the returns are, the higher is the momentum. But I think the value add in our methodology is how do we combine these momentums, these factors, because not all of these factors work all the time. So sometimes some factors work, whereas in other market regimes, some other factors work, and that is where the juice is extracted from the algorithm, so to say, that what are the factors that are likely to work in the current market conditions and use those, right? So in a growing markets, uh, momentum or growth factors work well, whereas in sideways or falling markets, value as a factor, which tells us how undervalued a specific stock is, that works better. Or low vol, which is low volatility, where on the basis of which we select the least volatile stocks. Those are the kind of factors that work well in sideways to falling markets. And we try to figure out what's the market regime we are currently in, and then what are the factors we should give weightage to. That's the overall methodology. And every month, at the start of every month, we are tracking almost 130 factors. We take the data of all of these 130 factors, create a matrix of 500 by 130, which is 500 stocks, and we rank each stock on the basis of these factors. Not all 130 are picked. We only pick a few where we feel which are more likely to work. And based on that, we come out with a consolidated score and then pick the stocks, right? So what could happen is, let's say, relatively high PE. One of the question was that why we are picking up relatively high PE stocks. So that is happening uh, because our models are saying that momentum is a factor that is working currently and that is likely to work in the near future. And because these high PE stocks have typically higher momentum also, we would pick these higher PE stocks. Whereas if the markets start falling, let's say, then what we'll see is typically what happens, momentum will shift to value. And in case of valuation, obviously, these high PE stocks will be most likely not picked, and we'll be picking mostly low PE stocks which are undervalued, right? But as far as the momentum is going on, we'll continue picking these high PE stocks because they'll always be expensive, the stocks which are in momentum. And one of the basic example is, let's say, Amazon. Amazon has given phenomenal returns in last 20 odd years, and it has always been very, very expensive stock as compared to the overall market, right? And somebody who has not picked Amazon because it being very highly priced stock because of its high PE would have actually missed out on all the returns that Amazon has generated. So some of the best companies uh, would actually be having these their PE as very, very high, right? So currently momentum is working, and that's why these high PE stocks are being picked, right? One of the questions was also regarding the weightage की equal weightage क्यों नहीं है हमारे portfolio में all the stocks that we pick. And I think equal weightage we have seen this equal weightage is a very simplistic way of saying to simplistic way of putting a portfolio together, but we want to go a step ahead and we want to see what is the weightage we should give to each stock so that it has the highest Sharpe ratio. Now, Sharpe ratio is a measure of risk adjusted returns. So we are not seeing, we don't optimize for the highest returns. What we want to produce is the highest returns at lowest risk possible. So we obviously have to control the risk. And that's where weightages also come in, that we want to uh, construct a portfolio of these 12 to 15 stocks, which should not really be having how to control the risk overall by allocating weights. And that's why we come up with these different weightages. Right? Is the number of stocks way too less? Uh, Now, this is a question that we have received this time, but another question that we receive also is maybe they want to concentrate it further. They want to take higher risks and have higher returns. So why have 12 stocks? Maybe why not 7, 8 also? Why remove the stocks which are having very low allocation, maybe about 1% or so? Uh, I think this specific portfolio is primarily meant for people who are not investing very large sums of money. And that is why I think it is reasonably good to have about 12 to 15 stocks. We can definitely increase the stocks like in our PMS, in which investors invest about 50 lakhs. We have about 80 stocks, which is, and there also people say it's way too diversified. I think there's no right or wrong answer. This is what we have, and this is what we feel we have been able to construct a very good portfolio. Again, to control your risk, what we always recommend is not to have too high allocation to Gulaq, uh, because most of the investors uh, they are looking at the past 1 year, 2 year returns. Obviously, we have done very well, but overall, on the long run, I think we should be more diversified and not to allocate to any portfolio uh, maybe more than 20, 25, 30%. That's the maximum limit. So you should have ideally 3 to 4 portfolios or 3 to 4 funds in your overall portfolio. So that way, I think it's maybe slightly on the risky side as compared to a mutual fund. But again, if you see the Sharpe ratio, which is a measure of risk adjusted returns, I think it would compare very favorably to other stocks which are having maybe more diversified portfolios. One of the question was also around why can't we hold the stocks for long term and multi-baggers need time to multiply. And another question we also received was why are we holding stocks for even a month? Why not rebalance it on a say weekly basis if there's some news or some market movement? So again this is I think a lot of debate. There are all kind of investors. Some investors want to hold for long term and want to have multi-baggers in their portfolio, whereas other stocks, other investors at the other extreme end are tracking these prices maybe on daily basis and want to take action on daily or weekly basis, right? What we are following is a very, very systematic approach here. Most likely, we will not have any multi-baggers in our portfolio. And having said that, we do not believe that having multi-baggers is really essential in order to generate phenomenal returns over long run, right? So one approach is obviously have multi-baggers in your portfolio, but what happens if you go after multi-baggers is, let's say you have 20 stocks and maybe you will pick two or three stocks which would turn out to be multi-baggers in the long run, and most of the other stocks would be kind of average. There will be few who would have destroyed value also, and that's overall way, that is one way of producing good portfolio returns over long run. Our approach is quite different. Our approach is we want to take, obviously, these portfolios are meant to be invested for long term, but our typical holding period is say from 3 months to 6 months. And when you see our returns, last year we would have picked about, I think, 58 stocks. Out of 58, roughly 38 stocks were profitable, about 20 were loss making. And what we are trying to do is trying to optimize for these short term movements. Now, having said that, we are not, these portfolios are not meant to be invested just for short term, for 3 months, 6 months. It is actually a very good way of investing for the long term. But our our optimization, or the way we pick stocks, the way we are rebalancing on a monthly basis, we'll never be able to pick multi-baggers, but still we'll be able to generate those higher returns, because even the stocks that are not performing, we'll be able to exit at a very fast pace. So the best stocks that we had picked last year, top 10 stocks had an average of about maybe 70-80% kind of returns, whereas the ones that lost money had lost just about maybe about 10 to 15% on an average. So the advantage is that we would not be having any stocks which would have lost maybe 40-50%, that kind of thing. So this is a very different approach than the conventional way. And this approach works. This approach has worked for multiple decades in other countries. And here in India, this is relatively new style of investing, but it definitely works. It's a very systematic, quantitative way of picking stocks. Yeah. Rebalancing frequency, I think I've already answered. But systematically also, we have tested our portfolios to rebalance on a weekly basis or even on a quarterly basis. The best returns that we are able to get after accounting for the transaction costs, the slippages, come out to be the monthly rebalancing. Okay. And there was a question around cash calls. Why don't we hold cash if we feel the markets are about to fall? I think our view is it's very hard to uh, take the timing call on the market, whether it's about to fall or not. What we are trying to do is trying to pick the best stocks for the current market conditions. That's what we do. And it does not mean that we are not reducing risk. So if our algorithms are telling us that the markets are not looking good and we should reduce risk, the way we reduce risk is, and what's been happening in the last few months, that our allocation to small cap has actually gone down to zero, and large caps is now almost 50%. So that is the way we reduce risk. We are picking up stocks, very stable large cap stocks. So that is our way of reducing risk, whereas some managers might want to reduce risk by actually going into cash. So we do reduce risk, but we never take cash calls.
Yeah.
Yeah. Simran, any more questions related to our methodology or stock selection process that you can, right?
I think you've covered it all, Vivek. We had questions regarding certain stocks like RVNL and Oro Pharma, or the latest rebalance on MapMy India being sold at losses
Mhm.
and then being bought at a higher price.
Okay. So I'll not comment specifically on each stock, but I think one of the questions we also received was what has happened in the past is we have given a buy call, the stock has come down, we have exited, and now when the stock is even higher, we are again giving a buy call, right? So this was one of the questions. It's mentioned here. Yeah, the second one. So why is this happening? I think I'll link it to the multi-bagger question also. Uh, Many times what happens is these multi-baggers have drawdowns also. They have very good drawdowns. I was talking about Amazon, which has given very good returns, but for so many times it has given very high drawdowns also of 20, 30, 40, 50%. Those kind of drawdowns also. And you should be willing to hold if you want to practice that kind of investing. We are not willing to hold a stock that ways for very long term in a loss also. So that's why the buy recommendation comes, because based on multiple factors we found it to be good. We are not saying all our stocks will be profitable. Few stocks are loss making, and then when they make a loss, we actually want to get out. We want to be sure that the market or the market is actually telling us that yes, this stock is a good stock, which means the price is going higher. So I always want to buy when the stock is going higher, not when it is going lower. So we are totally fine in booking losses, and we don't want to hold for long and to see it keep going down. That is not what we want to do. That's not how our systems work. And this is, we believe it's a safer way of constructing or picking stocks. So this will happen, uh, as I told you, out of 58 stocks, we had about 20 stocks which were loss making, and this will happen even this year. There'll be few stocks in which we'll lose money. So the idea is not always to have the only profitable stocks. That is not possible at all. We are not, in any of our calls also, we never say that we are only going to pick for profitable stocks. We are trying to do that, but obviously this is a business in which you have a very high error rate, right? And even if we are successful, maybe 60 to 70% of our picks are profitable, I think overall we'll be able to add good value or good alpha we'll be able to generate over the benchmark. Yeah.
Yeah. So the next topic on which we received a lot of questions was regarding rebalancing. So since this is a webinar on the latest rebalance update, it is only fair if we address these questions. So Vivek, for our new subscribers who would have maybe done their first rebalance this month, can you quickly explain what is rebalancing and what is the importance of it? This question was asked by Prateek.
So rebalancing is what we do, and we do this rebalancing typically at the month start. And I talked about 130 factors, and many of these factors track the price, the volume, FNO data, what institutions, mutual fund or foreign institutions are buying or selling, or what even company insiders are buying, selling. There are factors like which are the stocks which got included in a specific index or got excluded, because this also impacts the stock price, right? So there's a lot of data that we are tracking, and this kind of data is not possible to track by humans, even if we have a very large team. So this is being done by computers, and when over the month this data gets updated, we get a lot of new data during the month, right? And when the first of now next rebalance will be on 1st of March, we'll have a lot of new data from the 1st of February, right? We take that new data into account and see what is the portfolio I should be having at this on 1st of March, and whatever is the delta, whatever is the change from last time to this time, that is the rebalance. That is, there'll be few buy recommendations, there'll be few sell recommendations, and there'll be few hold recommendations. That is the rebalance. There was also a question regarding rebalance, what if it gets missed? uh, See, ideally, what we want you is to rebalance on the rebalancing day, or maybe in the next 2 days. Because what we have seen is if you are rebalancing in first 2 to 3 days, uh, then it's okay. But if you're rebalancing after those 3 days, the it starts impacting the PNL, and the expected PNL keeps coming down. So the best case is obviously rebalance on the first day, but even if you are unable to rebalance on that very day, and if you are able to rebalance on the next 2 days, I think it is broadly okay. So 3 days it is, try to rebalance on those 3 days. Yeah. Uh, Next question is, when can I see the actual profit by selling the entire holding? I don't really understand this question. See, what is happening is, let's say somebody invested 1 lakh, and after a month, let's say we generated 5% returns. It is 1 lakh 5,000, the portfolio value. So all the profit is reinvested. So we never recommend you to withdraw or book profits and withdraw that capital, right? So that's not our recommendation, because these portfolios, because equity investing is actually meant to generate wealth over long run. What could possibly happen is, let's say this year, if the markets are flat and if our portfolios are flat, you're not going to make any returns. And that keeps happening from a few quarters, a few years, that we have seen that. But over long run, what is to be expected is, and there was a question, what we'll expect uh, Gulaq Gear 6 returns to be. We are told that markets are expected to grow at around 12 to 15% annualized over next 10 years. And I'll personally be very happy if we are able to generate, let's say, about 8 to 10% alpha. So 8 to 10% in addition of that 12. So roughly around maybe 20 to 25% is, I'll be very happy if we are able to do that over next 10 years. That's my expectation. So we never recommend you book your profits and exit. And we also don't recommend that if you have some short-term need, don't invest that capital in equity markets, not in Gulaq, not in equity mutual funds. Keep that in debt. That's what we recommend. Is it possible to track stocks in real time and recommend buy and sell? So this is something that we have been experimenting with, and we haven't been able to get very good results out of it. So not as good as what we are doing currently in the monthly rebalance, that we keep tracking on a daily basis. And what will also happen is, I think operationally also it will become quite difficult if you actually keep getting, or you're expected to get recommendation at any time of the day also. Then it becomes very difficult for people to keep tracking and keep rebalancing. Here we are getting a question, even on monthly basis, these rebalancing gets missed. So on a daily or weekly, it will be even more operationally cumbersome. But having said that, we keep trying out new ideas. This was also one of the ideas that we tried in the past, and it did not really work as well as when we are rebalancing at a fixed interval on monthly period. Yeah, 6 new stocks got added, but the buy order was for more than 6 stocks. Why? Yeah, this would happen when, let's say, 6 new stocks are getting added. So you'll obviously have buy orders in those 6, but then there might be few other stocks which we are carrying on from the last time, but where we have increased the allocation. So let's say last month allocation in one stock was 5%, and this month it's 7%. So even though it's not a new stock, you will have buy orders in that specific stock as well. So overall buy orders, and overall even for sell orders, you're going to have more than the new stocks that are getting added or the stocks that are getting eliminated. So if 6 stocks are getting eliminated, you are most likely to see more than 6 stocks which are having sell orders, because there'll be few stocks which we are still holding, but where the allocation has gone down, and that's why we are selling only partially. So that is a possibility, and that's why it would happen. Next question is, should I customize Gulaq portfolios based on the update list or go ahead with small case suggestion? Customize it based on Gulaq update list or go ahead with small case suggestion. I don't really understand, Simran. Can you explain? Do you remember what this specific question was?
So this was a sub part of the question that I've previously covered. This six new stocks got added, but the buy order was for more than six stocks. Why? So they have asked if they could, if they should customize based it on Gulaq update or the small case email that they received.
I think one of the questions also was, should they customize this so that if they have a view on a specific stock, uh, what should they do about it? Should they express that view? So if you are, let's say, not really bullish about a stock and we have given a buy recommendation, should you just ignore that recommendation? So obviously this is possible through small case when you are rebalancing. It gives you option of actually uh, removing any specific stock or not accepting that specific stock in the first place. So small case does give you an option of doing this, but we would not recommend it. See, most of the investors that we have seen, the kind of effort that we are putting in on an individual basis, it is very, very hard to actually put in that kind of effort and then take a view. So mostly the way we take a view is we have heard a specific news, any bullish or bearish news because of which we might have that view, or we have heard some interview on YouTube, or maybe some influencer has spoken about it. All of these questions, all of these, because of these things, our views get formed. And what we have seen is most of the people are unable to take those views. Once in a while, that might work, but over long run, it is not really likely to work, because even in the research, we have seen that most of the people actually lose money while doing this stock picking. So it's a very, very hard thing to do. I will really not recommend, even though it's a possibility on small case platform, but we would not recommend anyone to do it, right? Why we sell first and buy stocks during rebalancing? I think this is a question because we have our whole capital is tied up. We first need to sell um, and generate some cash and then buy. That is what is happening. And that's why we need to sell first and then buy stocks. That's the order in which rebalancing takes place. Yeah. Simran, any more questions related to rebalancing?
No, Vivek, we've covered it all. So we can move on to the next topic, which was the performance or the returns. So the first question was that do you think Gulaq Year 6 can underperform the benchmark for a cumulative period of 20 to 30 trading days? This was asked by an anonymous investor.
Okay. Uh, do you think you can? Yes, definitely. Not only it can, but it will. It will underperform. And 20 to 30 days is a very small period. So I remember this data last year, out of 12 months, we underperformed in 3 months. We outperformed in 9 months, right? And there have been even quarters where we have underperformed. So not only this can happen, this will happen. This will happen for sure. Even this year, this will happen. Uh, and next year and every year, there'll be months where we underperform, right? There'll even be quarters where we underperform. So yeah, this can happen. Uh, Over year, if you ask me, at least it hasn't happened in the past. It can happen. Nothing is certain. See, nothing is certain. What we are trying here to do is trying to beat the markets, and it's a very, very hard thing to do. So there's no certainty here, right? You can look at our overall past historical returns, see how we have performed. And again, that is not a guarantee that we'll be able to perform in the future with the same kind of outperformance. We cannot give any guarantee. What we can give guarantee is we are trying to give our best effort in trying to pick the right stocks. So that guarantee I can give. But regarding returns, definitely no guarantee. This will happen. This will happen for sure. And 20, 30 days is a very small period. Yeah. How much CAGR can I expect in 25 years? For 25 years, frankly, it's a very long time. I look at, if you are able to see that far, I think you have a very big edge, frankly. I think in terms of decades, 1 or 2 decades, my view is I'll be, as I told you, I'll be very happy if we are able to generate alpha of about 8 to 10%. So somewhere in 20 to 25%, even if it is 20%, I think I'll be very, very happy if we are able to generate 20% CAGR over next 10 years, right? And it's a very hard thing to do. It's very hard to beat the markets. Invested recently, performance is down recently, what I should do? Again, as I said, see, these investing in equity markets is actually for the long term. Short run, we do not know how the markets are going to perform, right? I think maybe the one of the biggest trigger in stock markets would be the elections that are coming up in next few months. And although everyone is expecting BJP to win, and that's why I think we are seeing this rally, but still anything can happen. It's not a certainty, right? So over short term, markets are uncertain. We do not know what will happen over short run. And I think even 1 year is a short term. But over long run, if you pick any 5 year or 10 year period, I think markets are going to be much, much higher from here. That's what we have seen in the past, and that's what I would expect. So please do not invest if you are investing for short term. I think you would not have picked Gulaq. I hope you have not picked Gulaq because of last 1 or 3 months performance, right? If you have picked Gulaq, then you will be judging us on 1 and 3 year, 3 month performance, which is not really right. So give it time, ideally years, but at least 1 year. And as I've said, in the short run, market can go down. So if you would have invested in last 15 days or so, I think overall markets are flattish. Gulaq would have been down a bit, but as I said, this can happen. Yeah. So invest, keep in view a long-term horizon, and then approach the markets and approach your investing. There was a question about how Gulaq performed in the bearish markets. So we have some data. We have last 3.5 years of live data, but we have longer term data also. I'll take you through those slides. There's also one question regarding the net returns calculated after removing brokerage. I think regarding this, I would encourage you to go to our blog. There's a blog, a detailed blog that we have written, decoding small case returns. Have a look. Most likely you are able to uh, find your answer in that blog of how to actually calculate net returns and what all can impact your gross and net returns. So I would encourage everyone to have a look at this blog if you have any questions related to our gross, net returns, and the other costs that are involved. Right. Now I'll take you through the some of the data that we have. And again, this is a back-tested data, the current model that is being run. So for this, what I have done is I've taken 3 periods. This drawdown in BSC 500 of about 12%, and this was way back in 2013. After that, this drawdown of about 20% in 2016, and the COVID fall in 2020. Right. As you can see, in this specific drawdown, we had slightly less drawdown than BSC 500. So BSC 500 fell about 12, 13%. We fell about 8%. So we did better here. In this, it was almost the same, 20%. And here also we did slightly better, right? Maybe we can take a detailed look also in 2013. This is what has happened. Markets fell about 12, 13% and then recovered in next 5, 6 months. So over this period from December 2012 to January 2014, roughly 14 months, market fell and then recovered. During this same period of 14 months, this Gulaq strategy, again, this is backtest, but as per the current rules, as per the current strategy, this would have given about 30% returns, right? This was the next bearish phase in 2015-16. So starting from Feb 15 to July 16, about 1.5 years, markets fell 20%, then recovered. So in 1.5 years, it gave about 0% returns. We also fell, and during this 1.5 years, Gulaq gave about 10% returns. Yeah. And the third was during COVID. But here we have taken about 1.5 years before COVID, because the markets were flat during this time, and then markets fell and then recovered. So this was almost 20. So almost 3 years kind of, where markets were flattish, did not give any returns. And during these 3 years, we are able to give 80% returns. And regarding drawdown from peak to trough, as I've already shown here, markets fell about 30%. We fell about 27 to 28%. So almost similar kind of drawdowns as we saw in the markets. Yeah. Simran, any more questions related to bear markets or a performance that you have seen?
No, Vivek, I think a lot of people again wanted to know the future performance, future returns, but we can't comment on that as I've already mentioned. So the
Yeah.
next topic that we would want to cover is the different years that we have, the different portfolios. We have four portfolios: Gulaq year 3, 4, 5, and 6. So a lot of people, including Anil, Shambhavi, Himanshu, Piyush, and Amit, want to know the difference between these different portfolios and what kind of investors should invest in this.
Yeah. So, yeah. Now, gears are actually like we go on a drive, right? Some people like to drive very fast, whereas some people want to drive at a very moderate pace, whereas others would take a lot of time and would drive very, very slow, very conservative. I think as investors, we are also, uh, some of us are very aggressive investors who want to take very high risk and invest. So we have got request, how can we release Gear 7 also, which is even more aggressive and is taking higher risk in order to generate higher returns, right? And whereas on the other extreme, we have investors who really don't have that kind of risk appetite and are happy investing in FDs, which is kind of zero risk, right? And you have all the investors in between, right? And and that's how we have created these portfolios. So Gear 6 has 100% equity. Now, equity and debt should be thought of like in a car when we are driving, you have accelerator and you have brakes, right? And and there's a very I think sometime back I read, would you want to drive in a car which has no brakes in it? Obviously, no one would want to drive in such a car. So brakes, how brakes are helping you is it's allowing you to go faster, right? That's how brakes help, and that is the same thing in a portfolio. So you have equity and debt. Equity is like your accelerator, and debt is like your brakes. So I would never recommend anyone to have to drive without brakes. So that means I'll never recommend anyone to have only equity in his portfolio and no debt. So obviously we have Gear 6, which is 100% equity, but then we assume that your debt part is being taken care by either mutual funds or FDs, right? And depending on your risk appetite, what we recommend is Gear 5 or Gear 6 are portfolios for aggressive investors. For moderate investors, it's anything like Gear 4 to 5, and for conservative, it's Gear 3. So ballpark, that is the number, and that's how we measure risk. What you can also do is you can go to gulaq.com. There's a tool if you want to measure which specific Gulaq portfolio is meant for you or what is the asset allocation you should have. You take that survey on gulaq.com in the tools section, and this will give you uh, some idea about the kind of asset allocation you should have, right? These are the gears that we have. The equity is 100% in Gear 6. It reduces to 80 in Gear 5, then 60 in Gear 4, and then 40% equity in Gear 3.
We had a question regarding this as well, that do the stocks overlap between different gears?
Yeah, so stocks, as I already told, stocks are same in each portfolio, right? So when you buy a Gulaq Gear 5 portfolio, 40,000 is what will be required to invest. From this 40,000, what will happen is 80%, roughly 30. 2,000 is going to go into equity and 8,000 is going to go into debt. And the allocation to equity is exactly same as gear 6. The composition of that equity part is exactly same. Only difference is in the allocation to equity and debt. That's the only difference. But equity part remains the same in all of these portfolios. So that's why we don't recommend you to buy two portfolios. So if somebody has invested in gear 4 and gear 6, that is same as investing in a gear 5, right? So don't buy these two portfolios. If you want, you can switch from one gear and subscribe to another, but there is no point actually having two gears at the same time. If you want to pay us double, then it's obviously okay, but there's no point from your side to invest in two gears.
Another question was from Amit regarding the asset allocation advice. So they feel that 60 to 40 or 70 to 30 is too generic, and maybe we should rebalance as per the investment that they want to do in equity for a long period of time,
Yeah.
basis on going with this fixed allocation.
Yeah, I think you have a point. Only thing is, in the current scheme of things on small case platform, um, what we are doing is trying to serve a much more larger number of customers. And to do that, we'll have to give generic advice, which is the model portfolios, which is generic, right? But if you want to be very, very specific about what you should do, depending on your goals and your requirements and your income, all of that, then I think the best way for you should be to consult a financial advisor who will help you create a plan specific to your needs. So, yeah, that would be my thought.
Okay. Moving on, we also had a few questions from Ashish, Abhideep on the investment guidance. So, what is the ideal amount of investment that they should do in Gulaq to cover all their costs?
Yeah. See, as a rule, you should not pay more than, say, 2.5%, somewhere in that range, as a percentage of your total invested amount. So our fees is for the year 5,800, right? Uh, and if you just invested 1 lakh, then you are paying 5.8% of that 1 lakh amount to us, which is a very high fees, right? So what we recommend is at least take it to somewhere around 2, 3 lakhs. The higher it is, if somebody has invested, let's say about 6 lakhs, so he'll be paying us less than 1% of his total amount. So the fixed cost works better the higher you invest because your obviously the fees is fixed. It does not increase with what you are investing, but the minimum recommended is somewhere around 2 to 3 lakhs. We have kept it the minimum investment amount as 24,000 for people to try out this portfolio, see how this small case rebalancing works, how we are giving our recommendations, all of that. But what we want is to at least take this minimum amount to about 2 to 3 lakhs, where it will start making sense. And obviously, the higher you're investing, the better it is. But at the same time, what we also say is uh, not to have more than 25-30% of your overall assets in one fund. So if you have overall portfolio of about 10 lakhs, so in Gulaq, maybe you can go maximum 3 lakhs, but don't go higher than that. Yeah.
Yeah, now that we have covered the ideal amount, people also want to know if there is a maximum investment amount in our Gulaq portfolios. This question has been asked by Umakant.
Yeah. So there's no maximum as such. Just keep track of that 30% limit. But at the same time, what can happen is if this amount becomes too large, what we recommend is to move to PMS because in larger amounts, what you're going to encounter is much higher slippages. Whereas in our PMS, which starts with 50 lakhs, we have our own execution algorithms. which will help you uh, buy or sell or transact at a much lower slippages. That is one thing. And second thing is obviously you don't need to do rebalancing on your own. In PMS, we'll do all the buying and selling. So in that sense, for higher amounts, what we recommend is the PMS product, which is again the same methodology but more diversified portfolio.
The next question again is the famous debate that we get: should they invest it as SIP or lump sum? What, according to you, is better?
So SIP is obviously better because most of the people investing are uh, in job who are making their salaries on a monthly basis. So it's always a very good practice to take out a part from your salary into your savings and then put it into your investment account. So SIP that way is a wonderful tool. But if you have some lump sum amount which you want to put, uh, the data suggests that lump sum is better. If you have some lump sum, put it all in. But what we also understand is it's very psychologically very difficult thing to do, and that's what when I recommend, what I say is divide that lump sum amount in either 3 or 6 equal parts, and over the next 3 or 6 months deploy that systematically into markets. That's what I recommend. And if let's say markets correct suddenly, then you can just increase the pace of investment. So instead of 6 months, if the markets are corrected, maybe you deploy at a much faster pace. So that is psychologically more better. uh, yeah, but otherwise, see, it really won't make much of a difference. If you're investing for 5 years, 10 years, say for lump sum, really, whether you're investing right now or break it into 3 or 6 parts, it really won't make much of a difference, frankly. The more important part is uh, because of this analysis paralysis, most of the people just keep sitting outside, or because of the fear. Yeah, we markets बहुत high हैं, so I'll just wait for a correction, and which is what we have seen. A lot of people have been waiting for correction and they just missed the bus in last 1 2 years. So I think that is the worst thing that can happen to anyone. So have a plan, invest over long run, say for lump sum really is not a very big difference. Trust me.
Another sub part of this question, which was asked a lot by Muthuram, Sai, Harshit, Goyal, Karthik, Abdul, was if they should set SIP on the same date as the date of rebalance, what is the right time to do the SIP in a month?
Best time, see again, as I said, it really does not matter whether which time of the day it is or which day of the month it is, frankly. These are very small things. So if you like to invest mid of month, invest. Or if you like to invest at the end of month or start of month, really it's not a difference at all. Really. What is more important is you invest in a disciplined fashion every month, right? That is much more important than when to invest. So don't worry about when to invest. It's not a meaningful, it's not really a thing that you should think about a lot. Whatever feels good to you, invest and stay invested for long term. You're going to see very good returns. And not only, I'm not speaking about specifically about Gulaq, but equity investing in general.
Yeah. So, the next topic that we shall be covering is regarding the market. So, people are very curious to know your views on what is happening in the market. They want to know about the budget impact that the market would have, and if they should expect a bigger rebalance in their portfolio after the budget is announced.
Yeah. So we refrain from giving any market views related to stocks, related to sectors, related to themes. Now, one of the themes that is working is railways. One of the theme that was working last year was real estate. I think one of the best performing sectors, real estate, but we hardly had any meaningful allocation to real estate last year, and still our portfolios performed better. What we are not trying to do is trying to pick the best stocks uh, that are performing. That is not what our intention is. What our intention is to produce a meaningful alpha over next 1 year, right? That is what our intention is. At times we'll be right also, at times we'll be wrong. We'll definitely have some wrong calls. We have had some wrong calls in the past. We will definitely have some wrong calls in the future. But see, in order to generate, let's say uh, about 10% alpha, right, over 1 year, which is a pretty good solid returns. What is required is not even 1% alpha to be added every month. So every month, if we just outperform the market by 1%, over the next 1 year, we'll be able. Obviously, this will not happen every month, but on an average, I'm speaking. Uh, Over next 1 year, we are going to have 12% alpha, which is quite a good job in my view, right? So there'll be definitely we'll be missing few stocks, we'll be missing few themes, but I think this is our view, which I covered last time also, that our methodology factors in almost everything that can impact stock price. This includes fundamentals, this includes technicals, and this also has macro factors involved, right? So we are taking a 360-degree view and then picking stocks. So when we are talking about high PE stocks, obviously these are very expensive, but momentum is in favor, and we don't really want to exit until unless stock has started correcting. So it will be in our portfolio until unless it keeps going up, right? The second point, that all things being equal, a stock with obviously better fundamentals gets more weight in our methodology than not so good fundamentals. And you've got to trust this methodology. It has a decent live track record, right? Obviously, the back-tested data is there, but I'll give more weightage to the live track record that we have seen, that every year we have been able to outperform the market by a decent margin. And the approach is very flexible. So we are not saying that there's opportunity only in mid and small caps, right? Depending on the market conditions, if we find more opportunity in large cap, the allocation gets shifted there. But if we are seeing better opportunities in mid and small cap, the allocation will get shifted there. And for people who are tracking our portfolios for the last few months, they would have seen a decent change. I think few months back, our large cap allocation was just about 20%. And currently, over last 2 3 months, it has increased to 50%, and we have 0% in small caps. So the methodology is very flexible, and it auto corrects as and when it's getting feedback from the market that what is working. It will take that into account and it will auto correct. It will find out where the value is, what is working in the market, and then it will keep allocating to that specific stock or that specific sector, right? And finally, give it time. Give it time. Don't judge our portfolios or any equity portfolio for that matter over 1 month or 1 quarter or even 1 year. These are very short time frames. Give it time, give it few years, and then the equity investing actually works over long term. We really cannot take that short term view कि अभी perform नहीं कर रहा है. I think we are totally fine if it does not perform for a month. If we underperform, that's likely to happen, and we won't get worried, and neither should you. At the same time, when I'm saying this, uh, at all times we are always working to improve our methodology, right? How can we make our portfolio even better? What all things we can do? So that is something that we are doing in the background, but we really won't. We never get excited when things are working in favor and every month we are generating 10% returns, and we won't get disturbed by if we are underperforming for 1 or 2 months. That would happen. So a lot of gyan. I haven't addressed any stock specific or sector specific views, but broadly I've spoken about methodology, that how this takes care of most of the questions that you are asking about specific stocks or sectors, right? Really, we don't want to comment on specific sectors. Yeah.
Moving on is
Yeah.
there were questions regarding methodology, but I think we have already covered that. So we can move now to PMS. A lot of our current Gulaq subscribers are curious about our PMS service as well. These were inquired by Avinash and Rajat. So they want to know how similar or different is PMS to Gulaq, which is the ideal choice, and how has PMS performed compared to benchmark.
Okay. So the methodology is exactly same. The only difference is PMS is more diversified because people are investing much larger sums of money. Typically, they start with 50 lakhs. Excuse me. So it's more diversified, but the methodology is exactly same. Good luck or PMS, again, it depends on your conditions and depends on multiple factors. And one of the biggest factor is how large is your portfolio. So PMS typically is somebody who's having at least 1.5 to 2 crores of overall portfolio, so that you can actually afford to invest 50 lakhs in one PMS. But if your portfolio is, let's say, smaller than that, I would not recommend a PMS for you, right? So for smaller sums, good luck portfolios are better. For much higher, bigger portfolios, PMS would be a better choice. How has PMS performed as compared to the benchmark index? We have given a pretty good alpha over the benchmark index. And what I would recommend is go to this specific website, pms.stadvisors.com. Visit this. It has all the details about methodology, about how we have performed, and you can actually download a detailed report on our portfolio. And this is the long-term expectation, long-term back-tested results. So this PMS has obviously 5 year of track record, but a 12 year of back-tested results say that overall the alpha we have been able to generate, or alpha in this would be about 15-17%, and with much lower drawdowns. Okay, so this should have been negative. So when BSC index fell 30%, the long alpha actually fell 22%. So lower risk and much better returns than BSC 500 index. It has 5 year of live track record. Uh, Last year, it gave about 58% returns, and these returns are after all the costs, after all the transaction costs, brokerages, and slippages, right? Again, same methodology, multi-factor methodology. Minimum investment is 50 lakhs, and I think one of the questions from MA is about the fees, which is less than 1% of the AUM. Yeah.
I think we've covered all the questions that we got through the Google form. There were also some questions regarding some operational difficulties that people are facing with regards to rebalancing.
Yeah.
So, we would encourage you all to contact us through our support team. We have presented the phone number and the email ID on which you can contact. We believe that we would be able to assist and resolve your queries better if we get connected to you one on one.
Yeah. Simran, I'm also I am seeing a lot of questions on YouTube right now. Maybe we can
Yes.
take a few which we have not addressed.
Yeah, sure. If this question is being asked by Siddharth, can you
Mhm.
explain the process of SIP in Gulaq? Given that we have a lot of churn in stocks monthly, how effective is SIP in such cases?
See, it is definitely very effective. SIP is what a portfolio or a fund which is working, and you want to put in more money at, let's say, monthly. So it is definitely very, very effective. Uh, I don't see any issue in SIP. Obviously, there is churn, but even if you account for that churn and all of that cost, there is still good enough alpha out there, or good outperformance in spite of all of those costs. So SIP is definitely very effective way to invest. And again, not only in Gulaq, but any equity product, or for your even for debt overall your portfolio. I think SIP is definitely a very good tool that one should use to invest regularly in markets, be it debt markets or equity markets.
Yeah.
There's one question from Radhika around, have we tried bi-weekly rebalancing? Will that help? Yes, Radhika, we have tried weekly rebalancing. In terms of gross returns, it will definitely help. But when we are doing our backtesting, we also take into account what is the transaction cost, the brokerages, and the slippages one would encounter when we are rebalancing on weekly or bi-weekly basis. So net net, it will work. The monthly works best. So your gross returns are higher, but after those costs, your net returns would be lower in case of bi-weekly or even weekly rebalancing. Prateek Patra is asking, where can we invest for debt? Give some example. I think for debt, one of the best ways is to invest through debt mutual funds. Uh, we really cannot take you through how to select those debt mutual funds in this call, but maybe in the future we'll try to do something around debt investing as well.
Yeah, there is one question by Bhaskar. सेम सब्सक्रिप्शन पे एक डीमैट अकाउंट से दूसरी डीमैट अकाउंट तक पोर्ट कर सकते हैं क्या? वी फील दैट दिस इज अगेन एन operational question, so it would be best if you get in touch with our support team and they would be able to assist you with this transition.
Yeah. One of the question is also Jaya Prakash is asking, slippage means what? So, Jaya Prakash, this is slightly technical. What happens is, let's say stock का एक buy price होता है और एक sell price होता है, right? And what is happening in buy and sell is, let's say stock is uh, buy price, or somebody who is willing to buy at 100 and somebody who is willing to sell at 101. So, as an investor, when you are going to buy, you won't be able to buy at 100 because there is already a buyer at 100. You'll be able to buy at 101 where the seller is available, right? So, this difference between a buy price and a sell price is known as the bid ask spread, and this is the slippage. So, somebody who is selling in this stock won't be able to sell at 101. Obviously, you would want to sell at a higher price, but because a buyer is only available at 100, you will be able to sell at 100, whereas you'll be able to buy at 101, right? So this gap of 1 rupee is what is known as the bid ask spread and what is known as the slippage that you encounter while transacting in stocks, राइट? तो जब भी हम बाइंग सेलिंग करते हैं तो ये एक स्लिपेज वाला एलिमेंट इंट्रोड्यूस हो जाता है आपके पोर्टफोलियो में, जिसकी वजह से आपका रिटर्न थोड़ा सा, दिस इज अ कॉस्ट लाइक योर ब्रोकरेज कॉस्ट, एक कॉस्ट आती है आपकी स्लिपेज कॉस्ट भी। तो जैसे आप रिटर्न्स देख रहे हैं कि लास्ट ईयर 70% गुल्लक ने जनरेट किया, it actually you won't be able to realize 70 because you will have these brokerage, STT and those costs, and you're going to have some slippages. So it could be 2-3%, depending on the brokerage. It could be 2-3% lower or even 5-6% lower. That is the difference you are going to see in your portfolios. Yeah.
Okay, there is one question by Vishal Pandey. How do we manage dividends, whether it is reinvested or paid to the account?
It is paid to the account. But if you want, you can actually, whatever dividends you are getting, you can, whenever you are investing more, you can invest back it in the Gulaq portfolios. That is something that you can do. But the way this whole operations work, because these stocks are being held in your account, the dividends also you receive in your account. But you can, if you want, you can invest in it back. And on small case, you'll be able to track exactly what are your booked profits, what are your profits in the current portfolio, plus what are the profits through dividends. So all of that is available on the small case app. So Gavendra, there's one question. Mutual funds or small case, can we shift to different small cases from mutual funds altogether? Again, I would not recommend to have everything into small case portfolios. I think a balance is good because mutual funds, one of the big advantage in mutual funds is also the tax advantage. That if you hold a mutual fund for 5 years, even though your fund manager might be rebalancing, but because you are not selling that mutual fund, you are not liable to pay tax. You will be liable to pay tax only when you sell, right? Whereas in small case, because you are always whenever you rebalance and book profits, you'll be liable to pay either short term or long term capital gains tax. So Mutual funds are one very good way of investing, and I would not recommend to shift everything. But if you have found one or two portfolios which are working well in small case, you can have some allocation, overall allocation of your portfolio towards small case.
I think we're
Ah,
receiving a lot of
yeah.
questions.
I think Yash has messaged quite a few times. I want to know पहले rebalance करूँ या invest more करूँ. Again, Yash, I think operationally, I'm not sure. I haven't myself. I invest in small case, and I haven't done invest more during rebalance. I'm not sure whether that is possible. Simran, do we have any clue whether that is possible?
We will have to check with
Right.
small
Okay.
case and
Yeah.
get back.
Yeah. So the best is if that is possible on small case platform, you do both together. But if that is not possible, I don't really think it will make too much of difference. थोड़ा सा आपकी transactions extra हो जाएंगी. But over long run, it's not really going to make much of a difference. It's a very small minor issue. Really not too much to worry about.
Utpal is asking if they can switch to gear 6 from from gear 6 to gear 4, and if this is the time for the switch.
See, time for the switch would be then we are taking a call on the market that it's about to correct, and we don't have a view on the market, frankly. But if you want that, you want to invest in Gear 4, which is uh, more conservative, I think you can. You can't really switch your holdings. What you'll need to do is uh, you'll need to take subscription of Gulaq Gear 4 and Gulaq Gear 6, and then uh, sell your holdings and then buy. But what I would recommend is get in touch with our support staff, and they'll be help you. They'll be able to help you with the best solution to this. How can you do it? You'll obviously be able to do it, but what's the best way to shift? They'll be able to guide you better.
Rajat is asking, does the algorithm run on every last trading day of the month to select the stocks? This will help us to get an idea as to what should be the entry price while rebalancing.
Yes, typically it happens at the end of the month when the markets have closed. We take all the data and use that data to update our portfolios, and then that update is sent out to the small case so that you can rebalance our portfolio on the next day. That's what happens.
We are getting a lot of repeated questions on why don't we rebalance our portfolio mid-month basis on news. We have already covered that part in today's webinar as well and spoken about it in the past.
Okay.
Yeah. Uh, Gautam is asking, do you follow quant investing method?
Do we follow means do we ourselves invest? Obviously, we are following quant investing. This factor investing is actually a quantitative way of investing indeed. So in Gulaq, obviously our methodology is same. And if you're asking whether we have invested, I have personally invested. I know Simran has invested, and other members of in fact, all the members of Gulaq team, and most of the employees of ST have invested in these portfolios.
We also have a question asking where is Isha? So Isha could not make it today, but she will most probably join you for the next webinar. Okay, GP is asking, so should we invest SIP after rebalance? Again, we have covered this question already. Vivek, would you want to add anything else on that?
No, I think we've spoken a lot about it.
Prateek is asking again, I'm looking for long term investment with Gear 6. Is it advisable to start now that the market is at an all time high?
Yeah. See, all of these questions, I think they're related to timing. किस दिन इन्वेस्ट करूं, या अभी मार्केट हाई पे है अभी इन्वेस्ट करूं, या किस टाइम इन्वेस्ट करूं. I think all of these are very overrated questions, frankly. Don't give these questions too much of a thought. Uh, Again, I'll repeat myself. What is most important is the discipline in investing. So if you are doing SIP, doing it every month, irrespective of whether markets are going up or going down, I think that is one short way of generating long-term wealth. That is very good way of investing for long term. If you are doing anything else, then you are too much dependent on luck. If you are investing in thematic portfolios, uh, or doing any other thing, or doing market timing, or doing stock picking, then you might succeed, but there'll be a very big element of luck in that, right? Yeah. So all these questions are there. They're very very overrated questions. I think इसके बारे में बहुत ज्यादा सोच के ज्यादा फायदा नहीं होता है. Keep it simple, and it will be very good if you are investing for long term. जो भी basics हैं investing के, just follow that. Don't try to make it very very confusing or very uh, complex, right? Best is keep it simple. Yeah.
Sachin is asking, are there any plans to do mixed investment in India and NASDAQ in small case?
So yeah, we are doing research in multiple other countries, and US is one of them. And when we are ready to roll out a portfolio, we will do at some time. But as of now, we don't think we are ready to roll out any such portfolio. But we do invest our own company's money in these portfolios, and we are doing a lot of work, a lot of research in US as well.
Regarding this, Shrikant is also asking if there are any plans to launch futures and options by Gulaq team.
Frankly, no. They are meant mostly for HNIs. The kind of investment required is also very, very high. At Gulaq, our focus is much more on catering to demands or needs of retail investors. So we do have some plans of mutual funds. Let's see by when we are able to those plans materialize, but not really so much on the FNO side.
Watsil is asking, can Gulaq be considered as a long term investment?
Yeah, it is. It is definitely a long-term investment. It is for long-term investment only. It's definitely not for short-term investments. Yeah. I think the questions we have covered almost all. These are mostly uh, repeated questions. If you have any new, any different question, we can take that.
Yeah, I think we are getting a lot of repeated questions that we have covered
Okay.
in the webinar already. So, you guys can check out the questions by just rewinding on this video. We would be also posting this video after the webinar is over. You can simply head on to our YouTube page and access this video. So, with that, I think we can conclude today's webinar. Thank you so much for joining in, everyone. We hope you have a good night and take care of yourself.
Thank you, Simran.